Okay, so this week we were going to continue the itemized deduction explanation. So we did medical expenses last week. This week we're going to talk about the SALT deduction, which is the state and local tax deduction. So this is one that they're arguing a lot about in Congress right now, so it's kind of relevant. And they're going to continue to argue about it until something changes. So basically what it is, to start, it's made up of two things. The first part is the state and local income tax portion, which is like if you live in Illinois, it's generally like if you get a W-2 job, it's the state withholding on your W-2. So they'll withhold 5% from your wages. Most people, that ends up being their income tax deduction for state income taxes. Also, like if you owed taxes last year, you would have paid those in 2023. So that's when, that's also included in this deduction. If you're in a state that you don't pay state income taxes, like some retired folks in Illinois don't have to pay any income taxes. Also, if you live in Florida or Texas or one of those zero income tax states, you can take, instead of the income tax deduction, you can take a general sales tax deduction, which is basically, they have this table that you reference and it's based on your income. It's an estimate of your sales taxes. So that's the first part of the deduction. The second part is real estate taxes, so property taxes. If you own a home, part of your mortgage payment is likely for property taxes, or you pay it separately outside of your escrow account and you do it just directly to the county. But it's those real estate taxes every year plus the state income taxes equals your SALT deduction. However, the most important part, and the reason it's a big argument in Congress right now, is the Trump tax law back in 2018 put a $10,000 cap on this deduction. The reason is because, the standard deduction had risen so much. This is kind of a way to limit the amount of deductions that taxpayers can take. But this made a lot of people angry in high tax states such as Illinois and California and New Jersey and all those other ones. And because, they pay so much in state income taxes that they've historically been able to deduct, now they're capped at 10 grand. So if you live in like Will County or DuPage County in Illinois, your real estate taxes, odds are pretty close to the $10,000 cap, at least for a lot of people. And so this is kind of a frustrating part of the tax law. And again, maybe the biggest reason why a lot of people don't itemize their deductions anymore is because you got to get over that standard deduction. If you're capped at 10 grand here, all you have left basically for most taxpayers is mortgage interest and charitable contributions. So 10 grand plus those two, if you're married, it's got to be over 27 grand or, 13,850 for single people. So that's why most people don't use it. So that's you're going to see basically they're going to continue to bicker about this as they come up with spending bills and with any tax extenders that they're going to do this year. They usually do those right at the end of the year. So keep an eye out. This is something that may change or at least get modified. Maybe they'll bump the cap up to 15 or 20,000. There's been a lot of talk, and there's basically this coalition of Congress people who are saying we will not do anything to child tax credits or to some other like R&D credits and things like that people want to get done. They're saying that they're not going to do anything with that unless the SALT cap is either removed or modified. So you can expect to see some changes on that one in the near future. But yeah, that pretty much sums up the state and local tax deduction. Like I said, it's been very limited, and most people, if you live in Illinois, you take 10,000 and you're pretty much done with it. But if you have any questions about this or your specific situation, just let us know.